High above the earth, beyond the reach of human hands and the noise of gravity, there lies an invisible web of technology. 66 satellites circle the planet in perfect harmony, relaying the world's most critical signals across oceans, deserts, and polar ice. They belong to one company, Iridium Communications, an American pioneer in low Earth orbit satellite networks. This company built what no other could, a fully operational global communications grid, independent of ground stations. Anywhere on Earth, from the Arctic ice fields to the mid-Pacific, Iridium's network keeps the signal alive. Yet strangely, the market remains indifferent. How can a company so central to global communication be met with silence from investors? This is the paradox and the mystery of Iridium Communications. Iridium's story begins in May 1997, when the first satellite of its revolutionary network was launched into orbit. The goal was audacious: to make mobile communication possible anywhere on Earth without relying on terrestrial cell towers. Instead of land-based networks with limited reach, Iridium envisioned a constellation of low Earth orbit satellites, each passing the signal seamlessly to the next. Together, these satellites would form a continuous globe-spanning network. It was a concept decades ahead of its time, a marriage of aerospace engineering, telecommunication, and data science that few dared to attempt. But innovation, as history shows, often collides with economic reality. Launch costs were astronomical, devices were bulky and expensive, and consumer demand was far below expectations. Within just 2 years, the dream collapsed. In 1999, Iridium filed for bankruptcy, seemingly destined to become a cautionary tale of overambition in the space economy. And then came the first anomaly. Ordinarily, a bankrupt telecom firm would be liquidated, its assets sold, its infrastructure dismantled, its technology lost to history. But Iridium did not vanish. In July 2000, a new entity, Iridium Satellite LLC, was formed, resurrecting the company from financial ashes. Not a single one of its satellites was deorbited or destroyed. The reason was as extraordinary as it was revealing. The U.S. Department of Defense depended on Iridium's unique global network for secure communications. To the Pentagon, Iridium wasn't just a telecom firm, it was a strategic infrastructure essential to defense operations, maritime navigation, and global emergency coordination. So rather than allow the network to fail, the government intervened indirectly, ensuring its survival through new ownership and restructuring. A company that should have perished under free market logic instead became a state-protected asset. This was Iridium's first great mystery, its rebirth from bankruptcy through geopolitical necessity. Over the next 2 decades, Iridium quietly rebuilt itself. It turned away from consumer markets and targeted sectors that prized reliability over volume: defense, aviation, maritime logistics, and the Internet of Things, IoT. These markets might lack glamour, but they guarantee longevity. Military and aviation contracts typically last years, not months. Once a satellite service is embedded into a fleet or defense network, replacement is almost impossible. This strategy transformed Iridium into a cash-generating infrastructure company, not flashy, but enduring. By 2025, Iridium reported annual revenue of approximately $850 million, with $320 million in free cash flow. It pays a steady quarterly dividend of around $0.14 to $0.15 per share, rare consistency in a volatile sector. In any typical market, such financial discipline would trigger gradual but sustained stock appreciation. Yet Iridium's stock price remains locked in place. Here lies the second mystery, a disconnect between performance and perception. On April 22, 2025, Iridium released its first quarter results. Revenues and earnings both exceeded Wall Street expectations. 3 months later, on July 24th, the second quarter report told the same story: solid performance, steady margins, rising operational efficiency. Then came a major strategic leap. Iridium announced a global partnership with Deutsche Telekom to launch Iridium NTN Direct, a project designed to integrate terrestrial and satellite networks seamlessly. The initiative allows devices to switch automatically between cell towers and satellites, enabling universal coverage without the need for specialized hardware. In the world of telecommunications, this is a breakthrough on par with the invention of the smartphone. Normally, such news would ignite trading floors, trigger analyst upgrades, and push share prices upward. But the market remained unmoved. The stock lingered near its 52-week low, as if investors had collectively decided to look the other way. Why? Analysts have offered explanations, none fully satisfying. First, Iridium's business model is built for endurance, not speed. Unlike terrestrial telecom firms that see quarterly gains from subscriber growth, Iridium's revenue matures slowly. Each contract represents long-term stability rather than immediate excitement. Second, its capital expenditure cycle, satellite deployment and maintenance, is immense. A single satellite can cost tens of millions of dollars to launch and sustain, compressing profit margins despite strong cash flow. Third, the company's heavy dependence on government contracts, though stable, limits its commercial scalability. This pattern leads investors to classify Iridium as a steady but unspectacular firm. Yet this classification may be profoundly short-sighted, because while competitors like SpaceX and Amazon's Kuiper are still building their constellations, Iridium's network is already complete, fully operational and globally integrated. The market, blinded by its obsession with growth stories, may simply not know how to price a company that has already reached technological maturity. This is Iridium's third and deepest mystery. At present, Iridium stock trades around $18 with a market capitalization of roughly $4 billion. Its beta of 0.7 indicates relatively low volatility, and its EV/EBITDA multiple near 10 suggests undervaluation compared to peers. From a fundamental perspective, the numbers point to strength, not weakness. So why the apathy? Perhaps the market suspects risks it cannot quantify: government dependence, satellite obsolescence, or maintenance costs. Or perhaps more intriguingly, the market is simply misjudging time, because time is Iridium's invisible currency. Its satellites will remain in orbit for years, generating continuous revenue while newer entrants burn through billions just to catch up. To those who understand infrastructure cycles, Iridium's apparent stagnation is not decline, it's quiet dominance. So the question becomes, do you trust the visible numbers or the invisible network that encircles the Earth? Iridium Communications is not a consumer brand. It is the digital backbone of global mobility. Even now, its satellites are carrying signals across oceans, connecting ships to ports, planes to control towers, and researchers to civilization from the most remote places on Earth. Its true value is already at work, silently, reliably, continuously. When the market finally recognizes what has been orbiting above it all along, today's indifference will be seen as one of the greatest mispricings in modern telecom history. The Valuester channel invites all listeners to participate in the next investigation. If there's a publicly listed, private, or pre-IPO stock, or even a cryptocurrency that deserves deeper analysis, share it in the comments. Your suggestions shape the stories we tell next. And to all our loyal viewers who watch, subscribe, like, comment, and share our content, thank you. Your engagement is the signal that keeps this channel alive. We'll continue bringing sharper insights, deeper stories, and stronger convictions about the markets that matter most. This was Valuester.